Okay, so the 5 seconds binary options trading strategy on pocket option. This is the sixth day we are testing this baby, so to speak. Risk disclaimer: this is a very dangerous strategy. It's highly risky. I usually do not trade such kind of high frequency trading using small expiry times and extremely low short candles, like 30 seconds and 15 seconds. That being said, if you add a few risk management and money management in place and a few technical analysis tools, and you stick to those parameters, so to speak, to define your entry and exit points, you might see some consistency. Now, also, the strategy as it is explained all over the place on YouTube and everywhere else, it doesn't involve any technical analysis. So I'll explain why later on. So also a very important point, guys, very important point. If you want to trade such kind of strategies, you need a minimum decent balance to work with. You need at least $500. Okay. Now look here. This is the results of our testing days so far. I guess I'll give it 9 days to be fair, because we gave the martingale strategy that we tested last week. We gave it 9 days, and it was a very reasonable statistical data. So the first day was a win. The second day was a tie. The third was a win. The fourth was a loss. And yesterday, I considered it a tie. I made a couple of mistakes, and those mistakes costed me a lot yesterday. Why? Because my balance is low. I'm using $100 only. If I was using $500, it wouldn't be that much of a problem. I would have easily maybe ended up the fifth day in a win. But since my balance is extremely low for that kind of a strategy, yesterday ended up in a tie, right? Now, the strategy involves a little bit of martingale. So whenever you have a win, these are the four trades cycle. The fifth is always optional, this one, depending on your balance. So this is the amount of the first four trades. If you win the first one, you stick to $1. If you lose, you switch to the second. If you win, you go back to one. If you lose, you increase your amount to 5.5. Whenever you win, you have a net profit, plus you will recover the losses from the previous losing trades. Very straightforward. Now let's go to the strategy and setting up the charts. Okay. Remember, if you have any questions, please use the live chat. Do not hesitate. So let's begin by setting up the charts. First, you go here to the candles tab and select normal candlesticks and select 30 seconds chart time frame. I'll enable auto scroll for today because I'll be doing some technical analysis, so I'll need to go back and forth a little bit on the chart. Next thing you need to adjust is your expiry time, which is 5 seconds over here. So you click on the clock thing here. Usually it might be a flag. You click on the flag, you get the clock. Here you can change your expiry time. So select S5, as simple as that. Next, you need to add as many pairs as possible, having more than 90% ROI payout, because the martingale will not make you money in case the pair has anything below 90% ROI. Okay, so just so you know, the broker always, is it Pocket Option or Cortex or any other binary option broker? they always change the payouts frequently. They frequently change the payouts of the pairs for whatever reason, something about the liquidity. We don't care. We just have to just keep an eye on the payouts. Now we will add one indicator, which is the moving average. So you go to the indicators tab over here, you click on moving average once, you go to the pen over here to edit the settings. We need a 200 period moving average and 2 pixels. You can choose the color that you like. Why 200? Because at 200 period moving average, what it does, it smoothes out the price data of your last 200 30-second candles. So it gives you a very, reliable directional bias of the market. The 200 tells you where is the big guy in the market going. So in this case, for example, it's going down since the price is below the 200. If it's above, so the bias of the big guns, the big players of the market, is to the upside. Now, why do we need this 200? Because when I see this massive push to the downside and the price is below the 200, I will only take sell positions. If the price is above the 200, like for example, let me see, like in this case, now this is very new, avoid this, see something clear already happening. For example, like in this is also down. Okay, like in this situation, if the price is above the 200 period moving average, so that means you only take buy positions, right? Now, along the way, I will add a few more technical analysis parameters. For example, if I'm trading here, so I should take sells, right? So if I see that the price is doing a retracement to the upside, I might begin taking my sells over here since I see I have a strong resistance area and supply area as well. For example, if you see like something like um, common rejection point and the channel like situation, so you take sells, you take buys when the price is at the bottom of the channel, and you stop taking buys. You wait for a retracement. You go for buys as well. You go for buys from here and buys from here. Okay, so we will add a few technical analysis factors so it can help us at least try to mitigate and to not mitigate, it's an overstatement, try to limit our losses and increase our winnings and increase our win rate. Without further ado, let's jump right in and start trading. All right, so let me change the amount to $1 since you always have to have your Excel sheet on hand with the trade amounts so you can quickly and easily refer back to the sheet. So let's begin. Let me see if we have something. So avoid this. Look for something clearly above the 200 and an upward momentum, or clearly below the 200 with a downwards momentum. So in this case, when you go with the big guns, you know that you have the momentum of the big guys helping you with your trades. So your probability, it's a game of probabilities. Your probability becomes higher when you apply these uh, very simple and very, basic common sense analysis. Okay. So here we have something massive drop, and we have, see, we have a resistance area here, supply. We have another zone up here, and this is going flat, indicating going flat after a decent increase in price, indicating a potential reversal to the downside. Okay, you see, guys, I'm trying to improve on the strategy to eliminate the gambling factor as much as I can from it. Okay, So let's begin. This is something nice. So the rules, the final rule, your entry point, is when you have a red candle opening, a new candle opening. If it's red the first 5 seconds, you go for a sell in this situation, and if the price is above the 200, if the first 5 seconds are green, you go for a buy for 5 second expiry time. So this is very quick. So let me see. If I see a strong red candle, breaking out of this flat area, wiping out everything over here to the left side, this is this could be a strong indication of the sellers stepping in again. Also, you can consider the 200 moving average as a rejection zone, as a resistance line in this case. It's a zone, all right? Consider it as a zone, not the line itself. So also at this level, we might see rejection from the sellers and a drop. In addition, here you go, we have a level over here, and we have, look at this, you have this level here, see this level here, beautiful. So I think the drop is happening, the sellers kicked in. So let's see, we have powerful red, we go for a sell. That's our first win of the day. So let's wait for the beautiful. It's clearing out. You see, it's clearing out everything from the left in this flat area. Beautiful. 2 1. Let's see, we have a gap down. I don't like it. Okay, I will not go for a sell in this case. Look at these gaps. When you have a gap down, the opening price is below the closing price of a previous red candle. Most probably, this thing will go green. And if it goes down red, it might reject and go back up and do something like this. You see, so the more you know about, let's see here, we have a gap up, which is beautiful. I need red. That's red. I go for a sell. So the more you have information, the more you are educated about the market and how things move, the better your decision making process is. Now, I will be taking trades without doing very deep analysis because I need to stress test the strategy. Let's see, we have red. Nope, we have green. We don't do anything. Understand. Regarding gaps that I mentioned, gaps don't always work. They work in certain situations. Like in this case, you had a zero level price over here, which was fantastic for this one. I would easily take this one for a buy on a normal day. Let's see the next bar. So it's retesting, no problem. It's retesting your resistance, no issues. If I see sellers kicking in again, it will be even better. Look at this gap up. Come on, give me red. Give me red. Nope, I won't take the trade. If this thing goes over here at the normal day, I would take a sell trade without thinking, with a safety margin. Look at this, it's rejecting beautifully. It's gonna drop. Nope, rejecting. That's it. That's a win, guys. See the gap up over here, massive gap up. This thing can't go far in green. That's it. Another gap. Give me red. Give me red. Nope. So we don't take the trade. See, it's rejecting. So if you use the timer, for the guys who use the auto offset, when you see a gap up like this, wait for it to make a little surge and take a sell for the remaining time of the. This is also a gap up. Come on, what's happening? I'll change pairs. This isn't normal. I need to see some sort. This is a strong resistance area. I need strong rejection here. Okay, I'll change pair. This is nice as well. We have powerful supply zones. Beautiful. Look at this. You have a resistance level over here, very strong. You have the 200 zone as well. So let's see. Green, green, red. Go for sell. That's a win. We go back to $1. In my opinion, if we can test this thing with 10 seconds instead of 5, lots of losses will be gone from the whole game. This is a 9 days testing cycle for another time. I'll test this thing with 10 seconds instead of 5 to give the thing a little bit of a room, to move around a little bit. So we don't take any position. We need sells. Look at this strong downwards momentum, very strong. Now it might shift, okay? Not everything is possible, but you look for candlestick patterns. I need a strong red over here. If we see two reds back to back, for example, strong, that means the pair is continuing within its um, decreasing momentum, so to speak. Okay, give me a red, green, green. Nope, no trade. So let me mark this. Here we are. This place over here. Okay, so here we have a strong. Look at this. A strong resistance zone. The price rejected twice off of this zone. So okay, this is also green. So we don't take any positions. Look, it's rejecting. Beautiful. Okay, I need red. This is red. 27, 26, 25. We go for a sell. That's a loss. So we increase the amount to 2.3. Keep an eye on the payout always. See, 10 seconds would have given us this trade most probably as a win. Let's see here. It's a red. We go for a sell. That's the win. We go back to 1 to the initial amount. Beautiful rejection. That's it. That's it. Come on, baby. Keep going. Okay. Green. Powerful green. We don't do anything. Let's see the next bar. For those of you newbies, a bar and the candle are the same thing. If you are watching us on, okay, we have red over here. I'll go for a sell. That's risky. and that's a loss. 2.3. It's rejecting from this area, so you might see a massive drop happening soon or increase. But the probability, in my opinion, is for a drop. Beautiful. This is seller's momentum kicking in. We have a sell over here. That's it. A little bit of a bad entry point. However, we have the momentum. Get a win, so we go back to $1. We are doing very good so far. Okay, let's see. Green, powerful green, red. Okay, go for a sell. That's a beautiful. And we stick to $1. If we had 10 seconds trade on this one, we would have won by far. We won the last second, the 5 seconds thing. See, it's dropping. Beautiful red. Come on. Nope. Nope. Okay, so we don't take anything over here. We are already 5.2% up. Oof, massive. Okay, we have red. Go for sell. That's a loss. Go back to 2.3. This would have been a win with a 10-second trade, by the way. So let's wait. Gap up, beautiful. After a red, we have a sell. Come on. Was a bit late on this one. 1 second late I was on this one. However, it's a win. Go back to one. Doing fine. Very good so far. 6.3%. Now, after winning this trade, this is gonna be the last trade on this pair. I will see my win ratio and how many trades have we took. Okay, green, red, green. Don't do anything. When you see it jumping around, avoid trading. Be patient and be disciplined. These are your best friends. Beautiful drop. Beautiful drop. A rejection as well. Let's see. We have red. Powerful red. We go for a sell. Put back on us. No problem. See, 10 seconds would have been a win. 10 seconds would have been a guaranteed win. So this is the third loss we have today. If we had a 10-second expiry, it would have been a win. I'll keep on here until we win, okay? I'll stick to this pair until we have a win. Let's see. Green. Green with a gap down. After red, I won't take this trade. Let's see what's gonna happen on the next bar open. Give me a gap up. Gap down. That's dangerous. Okay. That's already dangerous for a sell. So let's wait. And it's a zero level price. That's 157 times 0.940. Keep an eye on your zero level prices. Let's see. Give me red. Give me red. Go for a sell. That's a loss. Let's go for 5.5. Okay, I think this is a retracement zone, and it will go back dropping. We have green. Nope. Okay, very powerful. Come on, it has momentum. Okay, so when you start seeing a lot of wicks bottoming or topping tail bars, tail and the wick, it's the same thing, and lots of jumpy pairs, jumpy candles. You see the candle doing this and this and this, and then doing this. Stop trading on, change your pair. Okay, so now we are 8% up. Let me see something else. See, lots of wicks. Avoid trading. Look for something. This is nice, powerful, very powerful. Downwards momentum. Let me do something here. Let's do a trend line. Okay. However, we have like a support area over here. That's a bit risky. However, seller's momentum is very strong. So let's see. This is the ideal situation to get a red. Oops, let me change the amount to 1. Always keep an eye on your amounts, guys. It can mess up your calculation. It can mess up your, your whole session if you give me red. Nope, it's a green. We don't do anything. So always stick to your amounts. Whenever you have a win, make sure you change the amount to your original starting amount. Okay, we have red over here. I'll take a sell. That's a win. Beautiful. Let me see what's happening. Okay, so we have a rejection point here. Okay, we have green. Green, we don't do anything. Now look at this. A sequence of 5 greens. Now reds should be stepping in, and notice that your greens are becoming smaller. So the next one, if it gives me red, it would be a beautiful entry. And this isn't a valid breakout yet. Let's see. Give me red. That's it. I'll go for the sell. That's a loss. Let's increase the amount to 2.3. So I was telling you this isn't yet a confirmed breakout of the trend line. So it might either retest the zone and push back up for a reversal, or continue the trend, and this will be a small retracement. Let's see, it was green, so I didn't take it. Let's wait for the next bar. If it keeps on being flat like this, going flat, I will change the pair. Look for something that has a clear, powerful momentum to a certain direction, up or down. We have a sell over here. Come on, baby. You see, if we get a if we had a 10-second trade on this one, this would have been a win. Let me see by how many points it was a loss. 2 points, nothing. Fraction of a second. So we needed those extra 5 seconds. We have red over here as well. Let me go for 5.5. Okay, I'm late a little bit. I take it. Fuck it, man. Okay, so here I was late. So I'll increase the amount to 13, which is our third trade uh, from the martingale cycle. Give me red. We have a red. We go for a sell. Okay, we have a loss. So look, guys, even though I'm adding a lot of technical analysis to the play, a lot of zones, I'm marking my zones, I'm looking for powerful trends, I'm looking for rejection areas, supply and demand areas, and still it isn't safe enough. I'll increase to 30. At this point, you should stop trading, okay? At this point, you should stop trading. However, let me see if I can find another pair. This is nice. I like this. It's a break, retest, and now it's going back down. Also, the 200 has a steep dive, has a steep direction to the downside. So I'll go with the sellers here. 30, it's becoming very risky. Okay, gap up. Come on, give me red. It's too late. Too late. So we stop. Day by day, I'm becoming more convinced that this can be much better with a 10 seconds expiry. We would have avoided at least 4 or 5 losing trades by just increasing 5 seconds. This is a green as well. I won't go for it. But why I won't go? Look at these topping tail bars over here and this huge seller. So seller's pressure is here. Look at this. Seller's pressure. 3 candles with a topping tail bar. That's a no-brainer to go for a sell on the fourth. Let's see. Now this one closed. Okay, powerful red. We have a gap. Okay, I won't take it. We had a gap down after a green, so this thing cannot go far below. It has to reject and go up. I think we'll have a beautiful gap up. Come on, give me red. Give me red. That's it. I'll go for it. Come on, come on. You see, 5 more seconds, it would have been a win. This thing, 5 more seconds on the expiry, it would have been a win. If Sarwar, are you here? If anyone is here, if you can go back in time and just check the expiry for me. If someone from the guys is here, this thing should have been a win for a 10-second expiry. Sarwar, if you are here, just you can scroll back to a few seconds before and see if this was a win. If we gave it 10 seconds, it was a win. It was a win. We took the trade over here, somewhere over here. It bounced a little back up and went back down. All right, I'll stop here. I'll mark this as a losing day. It was a win. I'll mark this as a losing day, guys. I can't, I can't be emotional about things. Uh, I have to mark it as a losing day. However, keep in mind something that all these, remember, we were in a win. We were up 8% up. When we started the session, it was 8% up. And we lost those four back to back. And we had 80, let me see, we had $87 in our account. $87 in our account. For $100 account, so technically you are in a loss $13, which is okay, considering that we lost as well the 8% that we gained at the beginning of the session. So we should have stopped over here. But I always take the fifth on live streaming. I want to stress test it. I want to stress test the strategy with a small amount of $100. Now, keep in mind, if we were on a $500 account, we would be 40. How much? 40. Let me see. We are now at 57. So 43. So $43 loss on a $500 account. $43 loss on a $500 account is around less than 10%, or around 9%, which is okay. You can come the next day and recover. So I will mark this day as a loss. I had nothing to do with the losses today. I made all the technical analysis possible on the face of the planet to make it win. Yesterday I made it a tie because it was my mistake. I made a mistake that changed the math of things. So this is a loss. I'll add a ninth day here. Let me add this thing. I hate Excel. I hate Excel. So up to this point, we have one winning day, two winning days, two losing days, and two ties. So we still have 3 days to go. So it's a bit too early to judge, to give a verdict. All right. So the verdict will happen at day 9. We'll have a full board statistical data. My observation up to this point for the first 6 days, 5 seconds expiry is too damn quick. It's too damn quick. You need to give the thing some time to wiggle, to move, to dance. 5 seconds is too dangerous. I mean, guys, adding all this technical analysis, support resistance, supply demand, um, going with the trend, along with the full momentum of buyers and sellers, and we are still having 3 and 4 back-to-back losses. That's not okay. There's something wrong here. And this is also considering we are using martingale. If we weren't using martingale, if you have if you have three back-to-back wins and four back-to-back wins, that's gonna hurt your account. So I think adding 5 seconds. I think today I was watching closely this thing. We could have easily eliminated five losses. Easily eliminated five losses if we had a 10-second trade expiry. And you will say, okay, that's only five. Okay, correct. But eliminating five losses, that means you are not martingaling anymore. You are not adding up and risking more on the next trade. That means you are increasing your balance faster to reach your $20 daily goal, for example. Five losses for such a high frequency trading strategy, along with martingale as well, five losses is a substantial decrease in risk. Kind of mad. You see, I stopped trading today. I will stop. I will not go ahead and continue because it gets me crazy when such things. This thing over here should have been. We should have been in profit if it was a 10-second expiry. All right. If you have any questions, as a strategy, we are exploring this 5 second strategy. A person will not trade anything less than 30 seconds on OTC markets, considering the volatility. Exactly, exactly, which is very logical, you know. However, look, when we finish those 9 days here, the next 9 days, so I'll do 9 days per strategy. Okay, the next 9 days will involve a strategy having the super trend indicator. Okay, so we will test the super trend indicator after this strategy when we finish those 9 days. The 9 days after, I'll go back to this one over here and replace this 5 second thing with a 10 seconds thing. And as of tomorrow, I've been watching this for the past 6 days. Yes, today I watched it even closely. We could have eliminated five losses with 10 seconds. So we have 3 days to keep a very close eye on increasing the expiry and how it would affect our results and how much faster it can help us reach our daily goal. Okay, that's it for today. A beautiful session. Even though it was a loss, we learned a lot. Learning is part of the process, and I love testing those things out. Do you want me to do something else? No, let's wrap this up for today. Enough. Let's wrap this up. If you have any questions, I'll give you a few minutes. And if you are still watching us on YouTube replay, subscribe, smash that thumbs up button. If you have any questions, use the comments box. I reply to every single comment. In addition, if you want to join our VIP trading group, all the links you need are in the description box. If you need a push to your balance, I have an exclusive 100% deposit bonus for all the traders who join under my link on Pocket Option. Yesterday we had a very beautiful evening session with my VIPs. We took 4 trades, 3 winning trades, 1 losing trade, 75% win rate. The day before we had a 60% win rate. The day before we had a loss, a small loss. We lost we lost 2 out of 3. I stopped. The market was a disaster. So we had 4 winning days, 1 losing day this whole past week. Okay. Um, so that's it. Let me see. Do I have any questions? Mark, just a suggestion. Please incorporate coming strategies on 1 minute time frame expiry. Okay, look, the next super trend strategy, it was also suggested by someone. Um, it involves adding a couple of super trend indicator to the chart on a 1 minute chart time frame, taking 3 minutes expiry times. Now, this is something logical because on pen and paper, if you want to trade logically binary options, you should always multiply your chart time frame by three. So if you are trading the 1 minute chart, you should take 2 to 3 minutes expiry. If you are trading the 2 minutes chart, you should take 5 to 6 minutes expiry. 15 minutes chart, 45 minutes expiry. This is something also crucial uh, to take into consideration. So technicals plus 1 minute. Look, Sarwar, the thing is, um, people are lazy. Um, Traders, especially newbies, they like to rely on an indicator. The indicator removes the resistance, technical analysis. Indicators are very popular among traders. So, and these kinds of martingale are extremely popular. So I need to test those things live in front of everyone for long period of times. So I'll use Supertrend. Supertrend is a decent indicator if you know how to use it. I use it sometimes to show me my exit points, where to get out of the market if I'm in a winning trade. Personally, I don't believe in indicators a lot. I like the super trend. Sometimes the super trend can draw you a support and resistance line extremely, professional. It will do it for you automatically. So we will discuss the next strategy after this one. Okay. Thank you so much, guys, and see you tomorrow at the same time. Goodbye.